Good morning, everybody. It's Thursday, November 2nd, 5:28 a.m. Central Time. Mostly higher trade in the grain markets this morning. December corn futures up 2 at 477. January soybeans up 11 and three quarters at 1326 and a quarter. December Chicago wheat up 1 and three quarters at 563 and a half. December Kansas City wheat up 3 at 643. December spring wheat up 1 and a quarter at 710 and a quarter. We've got some sustainable aviation news to start off with today.
On Wednesday, U.S. airlines and aviation companies joined ethanol companies in a letter to the Biden administration. The letter endorsed a regulatory change that would make it possible for sustainable aviation fuel made from corn based ethanol to receive federal subsidies. Environmental groups argue that the adjustment would underestimate ethanol's emissions. Back in September, the USDA announced it would spend up to $400,000 to guarantee the modification was made. A final decision from the Treasury Department is expected in December.
Treasury Department kind of kicked the can down the road on this guidance that we were supposed to see. In any case, we've been told that no matter how this goes, sustainable aviation fuel is still going to be a big thing in the future. When you look at who signed this letter, I mean, it's like everybody and anybody: Boeing, ADM, JetBlue, Southwest, GE Aerospace, was it Poet and Bungie and a couple of others. So everybody is on board here. And this is not a market moving item today, but as it relates to the future of corn demand, think about what our problems are right now. We've talked at length about how the book of export sales leaves something to be desired. Brazil is undercutting us on the export market. That's a problem. The other problem is electric vehicles and the idea that we may lose demand for gasoline and therefore ethanol in the future. I know a lot of you guys in rural America aren't seeing the EVs, but in the big cities, there are Teslas everywhere. And that's the trend, at least for now. Is am I sold on the future of EVs personally? I don't know. I think there are a lot of flaws in the system. I think there are some other routes. That's just my personal opinion. But in any case, this is what we need to see for the future for corn demand and the demand base in the markets.
Well followed private group StoneX increased its estimate for Brazil's soybean crop. The group pegged the crop at 165 million metric tons, up from its previous estimate of 164.1 million metric tons. Earlier this week, well followed crop scout Cordonier cut his estimate of the crop to 160 million metric tons, citing delays in planting. While both estimates would reflect a record crop, the difference of 5 million metric tons is notable. USDA most recently estimated the forthcoming Brazilian soybean crop at 163 million metric tons.
So you got Stone on the high side at 165, Cordonier on the low side at 160, USDA is in the middle at 163. No matter how you slice this, it's a record crop. All three of those would reflect a record crop, but the difference between them, I suppose, is noteworthy. I personally, my personal opinion, which does not matter, I think it's too early to make any big bold projections regarding the crop. Planting delays are going to cut production. I personally feel as if it's too early for that, but that's the case. If you guys are watching on YouTube and you're looking at the chart here, Brazil has become and will remain the king of soybean production globally. It was around 2015, 2016 that they eclipsed the United States, and they have expanded rapidly since then, whereas soybean production here in the U.S. has flatlined and will continue to flatline. The acreage pie in the United States is pretty much capped out. It's shrinking, according to some people, and Brazil continues to expand. We had that story, I think, last week about how Brazil is going to take old pasture land and try to put another 100 million acres of row crop production into rotation. So yeah, there's some different estimates out there. I don't know that I'd read too much into them, but you guys get the big picture here. Brazilian soybean production will continue to increase on an annual basis.
So if you guys aren't already subscribed to our premium content, you need to check it out. You won't find stuff like this anywhere else. Joe, can you tell me about the video you put together with Matt Bennett yesterday?
Matt was on yesterday. These markets hold no weather premium. And we've heard that statement from a lot of people and from a lot of subscribers that have come in the last couple of weeks. We tried to address this. I have somewhat differing thoughts on this. I think the market does hold some weather premium personally. I also think that it's a little bit early to get overly excited about South American weather. We had a couple other things we talked about too. We talked about the crop insurance implications. We talked about war implications. We've had so many questions come in about World War III and what happens if there's a war. Is it good for grain demand? Is it bad? Is it good for the markets? Is it bad? There's a lot of details that were addressed there that I think were very much important. If you guys want to see the premium stuff, remember, new premium video every day. Our email, which goes out every day at 5 a.m. Central Time, is jam-packed with info. Go to standardgrain.com. Sign up this morning. I'll forward you a copy of this morning's email. This is a $50 per month subscription. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else, I promise.
U.S. ethanol production increased last week. Weekly output of 1.05 million barrels increased 1.2% compared to the prior week and 1.8% versus the same week last year. Ethanol stocks were pegged at 21.01 million barrels. The print decreased 1.8% on the week and 5.7% compared to the same week last year. Implied gasoline demand decreased 1.9% compared to the previous week and 2.6% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is down 0.7% versus the same period last year.
That's a good ethanol production number compared to last year. We are up, I believe. Stocks are down. So everything looks good here in terms of ethanol production. Margins are excellent. I think year to date, we're running like 7% ahead of the same period last year in terms of ethanol production. So this is a bright spot as it relates to corn demand. And if the export program remains kind of softish, I think it will continue to be a bright spot.
According to the Bureau of Labor Statistics, U.S. job openings increased in September for the second month in a row, signaling a resilient job market. Openings increased to 9.6 million, slightly above the downwardly revised 9.5 million in August. There are currently 1.5 jobs for every unemployed individual, the lowest level in about 2 years. ADP reported that the private sector added 113,000 workers in October. That's up from 89,000 in September. Wages are up 5.7% from a year ago, the smallest annual gain since October of 2011.
I had my slides mixed up this morning. Here's a chart of the JOLT numbers, and it's trending lower, and that's what the Fed wants to see. Now, they probably would like to see this thing go lower every single month. That's not how it's going to work, but it has trended lower. The peak in job openings, according to this data set, was just above 12 million. March of last year, we're down to 9.5 million. A lot of people think that this data is flawed, that the numbers are fake. Maybe that's true. I don't know, but this is absolutely something that the Fed will pay attention to. And I still think, generally speaking, yeah, it's trending in the right direction. Okay, now we'll jump back to the Fed.
Okay, so the Federal Reserve held rates steady on Wednesday, but left the door open for further rate hikes. The rise in 10-year Treasury notes has helped cool the economy without requiring more rate increases. Fed Chair Jerome Powell suggested that the Fed is edging closer to the end of its rate hiking campaign. He also said that the effects of the Fed's rate hikes have yet to be fully felt, and the Fed wants to assess the impact. The stock market responded positively to the announcement, with the S&P 500 gaining a little over 1%, the Nasdaq rising 1.6%, and the Dow Jones increasing nearly 0.7%.
The next headline that I threw in from Bloomberg is kind of what the market thought about it. Powell hints Fed is done with hikes in pivot, cheered by markets. I think as Powell spoke, stock market rallied. The odds of a rate hike in December are pretty slim. The next meeting's December 13th, 80% chance of no hike, according to the CME Fed tool. When you look at the S&P, it rallied sharply yesterday, but it has been under some pressure. Year to date, we're still up 10.5%, and maybe we are going to hold some trend support here off of that COVID low. But this still may end up being a good year, and a lot of times you will see the stock market rally into the holiday season. That Santa Claus rally type thing, as they say, does occur very often. What did Cal do yesterday?
Cattle futures were a tick higher on Wednesday. Feeder cattle futures closed an average of 88 cents higher. Live cattle futures closed an average of 71 cents higher. Boxed beef continues to lose ground this week. Choice ended the day yesterday at 302.18. That was down $3. Select ended the day at 278.55. That was down 95 cents.
Outside markets this morning, the U.S. dollar is down and stocks are up again, which may have something to do with Powell and their talk yesterday. The S&P's up 18, the Dow's up 100 points. Bonds are up a full handle, which means rates are down. Crude oil is up $1.02 at 81.46 in the December WTI. Have a great day, guys. We will talk to you on Friday.